I'm going to call up Dolf de Roos to join us on a panel discussion. Amelia, it's a good thing that I had a good Catholic school upbringing. In your presentation, I didn't take note of the comments, lift up your skirt, who you're getting in bed with. I ignored all of that and I kept it in a very professional context. We're talking the investment. Dolf, I'm going to put you in the shoes of the international investor. I know you move around, you can see cross-jurisdictional, but Amelia has painted from somebody who's paying the school fees. How does she sell her story internationally to you, Mr. Retiring, yield-seeking pension fund in the middle of Phoenix?
I think Amelia has hit on something that is so accurate, and that is, if you want to make an investment, you have to walk the streets. You require all your people to do that. The same goes for if you want to sell your investment globally. You have to meet them and eyeball them. Having said that, remember what I said a moment ago, the world is changing. That is the way investors wanted it. They didn't just want to look at some prospectus from another country and assume it's all good. They wanted to meet the people. But it's changing. We've got social proofing on the internet, and we now have portals that enable us to see investment opportunities. I think Amelia's job is going to become a lot easier in the next 5 years, because when they get some of their projects on those portals, the better portals, I can recommend a few for you, then the world is going to be able to see them. And people who wouldn't have thought of Nigeria, because they hear that email scams come out of Nigeria, well, guess what they do? But they come out of a lot of other countries too. And there's a lot of good that they don't know about, because we often are very one-sided in our view of things. So I think the task is going to become easier, but go out there, meet the people who are investing. There's no substitute for eyeballing other people, for meeting them face to face.
Thank you very much. Mr. Salman, have we got the second mic ready there? Testing, testing. Okay, I'm going to ask for questions from the floor with a loud voice while the sound follows us. Hot. There we go. Got a question from Scott Plickett up front.
Amelia, a quick question. If you were to look in Africa, other than South Africans, who else are you bumping into that is doing real estate on the continent? Outside of, as in foreign investments, outside of Africa, who else is coming into Africa?
So there's Actis plays a huge role on the continent, and they operate ex-CDC on the continent. We see a lot of Middle Eastern and sovereign investors wanting to invest. They have an interesting view in that they only do 5-star type investments, so they don't want to cater for the 2- and 3-star business hotel, the small shopping centers. They want me to sell San City to them any day of the week. They want to build those kind of environments and only build 5-star hotels, and it's difficult in some of these markets. But where they give their money to the funds, that we see them, and we see a lot of Chinese investors starting to play on the continent.
If I may briefly add to that while the microphone's making its way back, we're seeing a lot of Chinese coming in with hundreds of millions of dollars, and they have another resource that they're bringing to Africa that no other nation can really bring the way they do, and that is human capital. They will bring 10,000 workers in somewhere, and I think that they are taking a very long-term strategic plan with Africa that's going to work well for them, and other nations should take note and see if they should be involved as well.
Amelia, you mentioned Nigeria, Kenya, Uganda as your target markets. But when I look at these 3 countries, and probably you're talking another country like Ethiopia, you kind of see one growing partner there. That's the extremist attacks, the radical groups. What is your risk there? Because if I hear of the Boko Haram, I'm not going to go there. I'd rather go to the other stable countries like Zambia, Malawi, Botswana, so on and so forth, but you hardly mentioned these more stable, politically stable countries.
Yeah, you make a very, very valid point, and it's something that occupies our thinking every single day. I always say to our board that if we expect our people to go there, we must be able to go there ourselves as well. So that's why I travel extensively, and if I want to go send my people to Nigeria to build shopping centers, then I go there too. And there's a whole host of other, it's not only political, the whole Ebola and health is also an issue that concerns us. I think it's a risk and reward computation in the end. Those are the countries where the opportunities are. We have to be prudent. We can't just expose our business. We've started to do things like not staying in internationally branded hotels, having cars that are unbranded. Just little things that will help protect our people and our business in those environments. But we also do understand that building a big shopping center is probably the biggest risk that we can expose ourselves to. And we think long and hard about those things. And we are not excluding Zambia, Botswana. We are in those markets as well. But they are small markets, and if we really want to crack the big African story, we have to play in these larger growing markets. But it remains a concern nonetheless, and it is difficult to get people that are willing to take that road with us.
Sure. I always find it interesting when you go to Accra. You have, in Johannesburg, you can't go anywhere without outdoor advertising, building for sale, to let, and what have you. In Ghana, you've got a sign, this land is not for sale. Different world, opportunities just bursting out. I'm going to take another question.
This one is from Amelia. You did mention the question of land tenure. Could you sort of expand a little bit on it? Because that's always uppermost in my mind when I think about Africa North and West.
Yeah. So, in very, very, very few, probably 1% of instances, you can have ownership of the land. 99.5% of the land is on a lease, either 50 years or 99 years. And in some cases, when you take over the lease, then the period starts again. It all depends on the quality of the land registry in those countries. In some cases, they are 3 years behind in that registry, and you can't get the information out. And it goes back to relationships and your partnerships. So I think it's important to look for a partner that can actually produce the lease on those, not someone that says they know someone that's got someone that's going to get you the land tenure. So you need to be able to get that security of lease. And one of our colleagues from RMB Westport taught me a lesson about 2 years ago, and he said, even if you have 100% of the ticks, there's still a 5% risk that something is going to go wrong. So that's something that you just have to take into account. But I think if you work with the government and you have good relationships in that country with the government and with the land registry, at least you can negotiate around that, and they can't just come and take the land away. If you have created a whole lot of jobs in the country and done what was good for that country, with growing the capital base, it will be less likely for them to just come and take your property away.
Thank you. Well, I've seen some risk mitigation in Port Harcourt. Instead of having disputes on land, well, just reclaim it for the sea, and you've done it, then you know that you've got title to it. So, quite getting innovative. But a question over at the front here.
I've been in that very Port Harcourt. We were taken to a piece of land, and driving. I said to the guy, "So where is this piece of land?" And he said, "Well, no, it still needs to be drenched. It's under the sea, so you get those two."
Hi, Amelia. It's Brendan here. I just wanted to ask a question. How do you guys offset the currency risk? I know that people can trade in US dollars and they put leases in US dollars, but do you have any other factors that you bring into account to offset the currency risk?
So in our in the funds that we look after, we stay. So in our Pan-Africa vehicles, we stay with dollars. So it's dollar money, and we have the leases in dollar or dollar index, and we'll have our contracts in dollars. So they vary. The currency risk will be that of the retailers themselves, because they trade in the underlying currency and they need to look after that. And then in countries where we have country-specific vehicles, like in Kenya, we're launching a REIT. There is a shilling vehicle with shilling underlying leases. So you try to keep your currency together so that you don't have divergent currency risk. It will come in time when you have to have local, in countries where there's local leasing required, or local leases required, and for those we'll have to review in what vehicle you put them. You can't really put them in a dollar-based vehicle. You just create too much risk.
Can you imagine the set of financials in Amelia's world for an embedded value calculation in a Nigerian asset in dollars with debt in a rising inflation environment? Thank you. Any further questions? I'm going to take 2 more questions and then get to some drinks.
Hi, Amelia. I believe that the Stanley Fund, there's a minimum investment of $5 million, correct? And if it is, I'd like you to give us a reason for it.
And were any of the guys who came in with the $9 million in cash coming to see you?
So that fund is specifically targeted at institutional investors because it's a long-term vehicle. You need to stay in it for 8 years. 4 + 4 is typical private equity structure. If we don't raise all the money, which is unlikely, then we might think of creating a trust above that, bring in retail investors so that we can create a group now of that, the 5. It's very complex in an institutional structure to blend institutional and retail investors. But we do have other opportunities for retail investors that want to invest on the continent. Keelan Claw runs a Africa listed property fund, and through that I think you can come in with probably 500 rand into that. So it's a different investor base. It's got different regulatory issues. This fund, the development fund of ours, regulated out of Mauritius, and if you have a listed entity, you need to have 100 investors. So it becomes quite a complicated regulatory thing to deal with. So it's targeted at institutions, and that's why you need to take $5.
Thank you. I'm going to take 1 more question. Back over here to the front.
So I did 1 question.
Fire away.
Fire away. The mic's coming to you.
This one's for Dr. De Roos. You're sitting next to a banker, and your new model that you're talking about is crowdfunding. How does the bank play into this relationship? Do you see this working hand in hand, or are you guys going to be finding people to take over their role?
The jury is out on how it will play out, but I think there is an opportunity for the banks to work in well, because every crowdsourced investment vehicle has the choice of saying we're only going to use the investor's capital to buy 100% of the asset, or they can still say we'll raise 40% and get a loan from the bank for 60%. And then the question becomes, would the bank prefer having as their mortgagor 1 individual who's come up with 4 million, or 2,000 people who crowdfunded it? And in my view, they will prefer the crowdfunding model for all the reasons we touched on before, and Scott will elaborate on. The social proofing shows what they've done as a track record in the past, whereas it's very easy for an individual to create the illusion of having a good track record when in fact it may not. So I think the banks are going to embrace it, but I think it's also going to change banking. A bit like Uber is changing the way we get paid for rides with other people. So it's a great question, and I know I didn't give you a definitive answer, but I think we're about to enter a phase shift, and everyone's going to say, okay, banks have made obscene amounts of money with fees and all that. That's all going to change, because there's now an alternative, sanctioned by governments.
I thank my panelists, Amelia Beattie and Dolf de Roos. I thank you for your participation so far. I think you deserve to be rewarded with some refreshments outside. I'm going to see you back here at 11 o'clock, and we're going to crack along the program. Thank you so much.